Good morning. I hope everybody had a great weekend. Hope you enjoyed it. I know I did. Lots of baseball, so it was all great. And I wasn't a big fan of the way the markets closed last week, but as we do every Monday, we talk about recap and we preview the following week. So last week we had a little bit of pressure on the market, midweek, and had a pretty big sell-off. And if you follow the levels, if you follow what we're looking for, you know that we talked about 1600 in the S&P as a potential support level, and sure enough, the dead low last week was 1598 and change. That's pretty close to 1600. And of course, on Thursday, after hitting 1598, we turned around, and by Friday, and by the jobs number, we had a rally of over 300 points from the low to the close of Friday. So a lot of buying pressure, a lot of action, but interesting, I think, to take note. If we look at last Monday, we had an up day, but on very, very heavy volume, which is unusual, but that was indicating that there was something in the cards and something in the works, because volatility, the VIX, was climbing into a big rally. And by Wednesday, that information did play out, and the market did get waxed pretty good, and was certainly on the ropes on Thursday. And I think what was interesting to find about Thursday is I really thought, that we would be fairly benign. In fact, I said it on Fox, and I said it in my writing, that we should be probably fairly benign the day before jobs, and it was anything but. It turned out to be a virtually nothing day, but it was wild action. And then of course Friday, the jobs number, they're making a big deal out of this jobs number, which we're going to talk about tomorrow, the jobs. But I don't think it was that big a deal, but certainly the market loved the number, and up we went. Now, for the week, we gained less than 1%. As you look at at the trend, we still made a lower high. If we don't break a higher from here, then I look for more of this downward action to come into play. So as we look into this week, we're now heading into summer. Typically a little slower, but we've had a lot of action here. So I look for this to continue. I look for the summer to be active and busy. I look for resistance levels to hold. I think you got to take a look at 1640 to 50 in the S&P as a spot to look to sell. I'm still from the school that we're not going to take new money here, and the new money is longer term capital. We're swing trading or day trading has nothing to do with new money. New money is simply money that you're putting in the markets for long term gain. So when we look forward to this week, fairly big news week, a lot of things that can have some effect. We are now no longer looking at earnings. Earnings aren't until July now, so we're basically trading strictly on the information. So a lot of the things that will come out will be, what's the Fed doing? What's the Fed doing? That's the new whisper. What's the Fed? What's the Fed? And we don't care. The bottom line is I think the Fed is probably going to try to pull out earlier than anticipated. I think we've seen a little whiff of what they're capable of and what they're doing. I think you're also starting to see a lot of dissension among the troops. I think the other thing you want to look at is the Fed meeting is next week, so that could be in the cards. But look to watch the overall level. I don't think we're going through 1650, and even if we do, I don't think we're going through far. I still believe the risk is to the downside, and that is going to be the way that I'm going to play it as a rule. I don't think that there's anything to get so excited about. I think there's a lot of issues that are still unaccounted for. I think Friday's action is kind of what we talked about. Market sold up pretty hard, and it got a pretty big bounce. Nothing to chase after, nothing to get excited about. Again, it goes down to our individual stocks and what we're looking at. So if we find something good, great. If not, you'll look on the sides, or if you can find a good short position. That's really the style that we want to focus on now. We want to lean to the short side. But if you find a good chart, don't be afraid to buy the long side. Again, the markets on a macro view are one thing. Looking at individual stock is another. So remember to keep that in mind. I'm also really happy to let everybody know I am now starting to do my own radio show every day at 5 to 6 Eastern. And you can get that show on the LibertyExpressRadio.com. And you can listen live. It's done through the internet, and it's done with my good friend Alan Butler. And I'll be hosting an hour every day, 5 to 6. Also, tonight is the Average Joe Options Call. We've been doing really well. We were short gold last week, which turned out to be a really good trade. Hope you can join us. If you need some information, Todd at AverageJoeOptions.com. For Monday, the Bubba Show. We'll talk to you on Tuesday.